Hello everyone, warm welcome to Super Coaching Regulatory Bodies YouTube channel. My name is Madhav Sir. I welcome you all in a very important session. So today in this session we are going to discuss a really very important idea, and the area which we are going to discuss today is RBI Grade B Phase 2 examination, which was conducted on 19th of October. So today in this particular video I will be discussing with you the important questions which were asked from finance. Now the question is how this session is going to help you. If you have already appeared for this particular exam, then this session will help you to find out that whether you have given the correct answers or not. And secondly, if you are preparing for 2025 examination, then this session is going to set the base that what kind of questions are asked basically from finance and what should be the right strategy you need to follow in the near future in order to achieve your target. So without any further delay, let's get started with this particular discussion. But before I start the discussion, I would request you quickly copy the link of this session, share it with your friends. I'm also doing the same. So let's copy the link of this session collectively, share it with our friends so that more and more students, they can join us live in this particular session and they can have the benefit of this session. So let's get started, guys. The first point from where I'm going to start is, we know that in the phase 2 examination we have two areas, or we have two aspects on the basis of which questions are asked. The first aspect is objective questions. Around 30 questions are asked. We have 20 questions of 2 marks each, and we have 10 questions of 1 mark each, for which 30 minutes are allotted. Then you get the next segment, that is the next section, where we have 90 minutes, where you need to type 2 questions of 15 marks each and 2 questions of 10 marks each, where the option will be given 3, out of which you need to type any 2 answers. Now, today I will be discussing all the questions which have been asked in the past. So let's get started. The first question which I have for you all is, the question is, I would say, an appropriate question in terms of the possibility that it could be asked in the examination. The reason behind is, REITs were in news, but specifically small and medium REITs were in news in the recent times. So the question is, what is the minimum asset value required for small and medium REITs in India under the new framework? So under the new framework, what is the minimum asset value required for the same? So if you haven't appeared for the phase 2 exam, it's okay. Read the question carefully and then give me the answer that according to you, what should be the correct answer for this particular question. And trust me, guys, trust me, you're going to enjoy the discussion for sure, because many areas which are important for your upcoming examination will be discussed in this particular session itself. First of all, I'll start my discussion with the term REIT. If someone asks me, so what do you mean by the term REIT, then tell me what should be the answer. Tell me the answer in the comment section below, that what is REIT? May I have the answer, please? May I have the answer, please? What is REIT? Sir, REIT stands for what? Sir, the term REIT, it stands for Real Estate Investment Trust. It stands for Real Estate Investment Trust. Now, you must be thinking that, so what is the actual meaning of this particular term? Remember that REITs, these are the companies that own, operate or finance income producing real estate. That means these are the companies, as the name suggests, they are owning or they are financing the income producing real estate. And REITs, they provide a way for an individual investor to invest in the real estate. For example, if you want to invest in the real estate, that means you need to invest huge amount so that your investment can be monetized in the near future. But REITs give you the possibility that without having or without actually buying, managing or financing any property themselves, you can generate income through the shares. You can generate income with the help of these instruments, which means you purchase this instrument, and if the company which is owning the real estate, it's going to earn the profit, that profit will be shared with the shareholders as well. So that is the basic aspect, that is the basic concept behind setting up these organizations. Now, The question is, sir, these organizations are regulated by, then my answer is, sir, REITs, they are regulated by none other than, that is the regulator of capital market, and the regulator of capital market is what? So the regulator of capital market is SEBI. Now, recently a new framework has been introduced for small and medium real estate investment trust as a part of SEBI's initiative to expand the reach of REITs and making them more accessible to the smaller investors. This initiative has been taken, and REITs, they can benefit the investors because they generate a regular income stream, as well as they help them to diversify their investment, as well as to earn long-term capital gains in the near future. So on the basis of this initiative was taken, and the question says, what is the minimum asset value required? So the minimum asset value required is 50 crore rupees. So the answer to this particular question is 50 crore, that is 50 CR. Is it clear? Is it clear? Is it correct? Okay. Now, let's move on to the next question. The entire screen is for you guys. The question says what? So the question is related to UPI. What is the number of people to whom delegation can be made in a UPI circle by the primary user? What is the answer for this particular question? Before we answer this question, I hope you must have heard this term UPI. It stands for Unified Payment Interface. It was launched by NPCI under the guidance of, or the assistance of, RBI as well as IBA, that is Indian Banks Association. So this, I would say, is a platform which has revolutionized the online transactions or the digital payments in the country. Because of UPI itself, India has become the largest. India has become the country, or I would say India is the country on the first rank, or now India is on the first rank in terms of highest number of digital transactions. So remember that highest number of digital transactions on annual basis, monthly basis, have been recorded in India, and the answer to this is same, that is because of UPI. Now basically, what is UPI? So UPI enables various services where you can transfer the funds peer to peer, that means people to people, individual to individual. Fund transfers or payments can be done. You can even come up with the merchant payments, that means if you're purchasing a product, rather than paying in cash, you can directly pay them with the help of this UPI. Even I would say you can make your bill payments. Most of the bill payments can be done with the help of UPI platform itself. So UPI ecosystem, it includes various shareholders. So if someone asks you what are the shareholders of UPI ecosystem, so UPI ecosystem include the banks, because you are holding your accounts in the bank itself. Along with the banks, we have the service providers. For example, PhonePe, we call them what? We call them payment service providers. We call them payment service providers. We have PhonePe, we have Google Pay in this particular category, and last but not the least is you and me, that is the users. So these are the stakeholders involved in the UPI transactions. Remember that UPI has become one of the most popular payment system in India. Reason is what? So the reason is its ease. You can use it very easily. Secondly, and most importantly, it is interoperability. What I mean with the term interoperability, it means if you have a UPI, you can receive the funds from any individual out there. Maybe he is using the same payment service provider or not, maybe he is from the same bank or not, that is not going to hamper. And the third most important point is, so the settlement is done in real time. Settlement is done in real time. The moment you make the transaction, amount is debited from your account, and simultaneously the amount in the real time is credited. In the real time is credited into the receiver's account. Now, UPI is basically a real time, or I would say real payment system, which was developed by NPCI. In UPI circle, primary user has certain privileges to delegate control to the other users. The number of people to whom primary user can delegate the control is 5. You can delegate the control is 5. So answer of this question is 5. The delegation helps in managing transactions. What is delegation? So delegation will help in managing the transactions, as well as other functionalities efficiently, especially in a business or in a family setting. So having an ability to delegate 5 people, ensuring that the primary user can distribute responsibilities overwhelmingly with the help of this particular format. For example, you're a family of 5. I have given the access to all 5 of them. I will be asking one to make the electricity bill, one to pay the mobile bills of the entire family, one to make the rent payments, and in this manner you can delegate the services which are going to be helpful in near future. So primary user can delegate how many parties? Then the answer is 5 individuals or 5 parties can be delegated. Moving on to the next question, which is a really very important question. The question is related to current affairs, but you can answer this current affair question only if you are aware of the concept that what is WMA. You might have heard about ways and means advances. Actually, what does it means? I will jump to the RBI function. One of the RBI's important function is that RBI's government's bank. Government's bank basically means RBI is responsible to accept surplus funds from government, as well as RBI is responsible to provide loan, and even RBI manages the government accounts. But if I talk about the loan wala part, in that particular case, government can borrow loan from RBI, but RBI is not allowed to provide loan against any asset other than government securities. That means if you have government securities, whether you are a bank or government itself, then you can borrow from RBI only and only against the government securities. So WMA mechanism was introduced back in 1997. It was introduced back in 1997. What was the purpose of introducing this? So the purpose was to help the government so that government can meet their temporary fund requirements. So government can meet their temporary fund requirements. That means government can meet their temporary mismatches between the receipts as well as the expenditure. So there are 2 types of WMA. One is normal WMA and the other one we call it as special WMA. But the most important part is, interest rate which is charged on WMA, it is linked to repo rate. So repo rate is the interest rate which is charged by RBI if government is borrowing under WMA. RBI periodically reviews and revises the WMA limits, and on the basis of this question was asked. You know what? Before the introduction of WMA, if government wants to borrow the funds from RBI, then if government is borrowing the funds from RBI, it's fine. But before WMA, government asked RBI to print extra currency so that government can manage its deficit, or I would say RBI print extra currency for deficit financing. But now this has been taken over with the help of WMA, and this limit is revised or it is given on regular basis. The question is second half of the financial year. If I talk about financial year, it is April to March. First half is April to September and second half is October to March. If you count 6 months, so on that particular basis, this limit is given. So the question is from the current affairs that what is the limit for the second half of the financial year? Then the answer is the limit is 50 crore rupees. That means, 50,000 crore rupees. That means government can borrow 50,000 crore rupees from RBI under the WMA scheme. Moving on to the next question, which is a very important and a beautiful question, I would say, which has been asked by RBI. The question says, what is the new timeline for the public issue of debt securities and preference shares reduced from T plus 6 working days? Now, first question is, who is responsible to give these guidelines? So the regulator of market. And who is the regulator of the market? If I talk about capital markets, the regulator of capital market is SEBI. I don't know how many of you are aware, but SEBI was set up back in 1988, but its act was introduced in 1992, and SEBI Act 1992 was introduced, and SEBI was established under its own act since 12th of April 1992, but SEBI was initially operating in the country. But when we talk about public issue basically means when we issue the financial instruments to the public through IPO, that is initial public offering, or maybe through FPO, that is follow on public offering. Now, the question over here is, so what do you mean by the word debt securities? Guys, debt securities basically means the debt instruments through which companies or fundraisers, they raise the funds in the form of loan, and preference share is a special type of equity instrument where your return is predefined as well as your preference share can be redeemed in the near future, but most importantly, they have preference over the equity shareholders in terms of dividend payment as well as in terms of payment at the time of liquidity, at the time of insolvency of the company. Now the question is, so what do you understand by this T plus 3? T plus 3 means T is the day on which the transaction is done. So what is the new timeline for the public issue of debt securities and preference share which has been reduced? Earlier, if you are purchasing it on, let's say, Monday, then Monday we will add 6 days, and after those T plus 6 days, these securities will be allotted or they will be reflecting in your demat account. But now this settlement will be done in T plus 3 days. That means T plus 3 working days. I would suggest the term T plus 3 working days. T is the transaction day on which the public issue closes, and 3 working days after the public issue closes, the securities will be transferred or the securities will be, I would say, allotted to the individuals or to the investors who have been applied for it. So this reduction in the timeline, it will help in faster access to the funds obviously for the issuer and provides quicker liquidity for the investors as well. So this will undoubtedly ease, or it will be a step considered as improving the ease of doing business in the country. So answer to this particular question is T plus 3, that is from T plus 6, now it has been reduced to T plus 3 days. But remember, 3 are working days. Working days. Non-working days are not added. Moving on to the next question. Which of the following types of risk is associated with NBFC? What is NBFC? Sir, it stands for non-banking financial corporation or companies which have been registered under Companies Act, and they are operating as an NBFC under Section 45 of RBI Act 1934, under Section 35 of RBI Act 1934. Remember that NBFCs are those financial institutes which are allowed to accept deposits, which are even allowed to provide loan, but they don't possess the banking license, and they are regulated, they are operating under the norms and rules and regulations which are set by RBI. Now, sir, if I talk about NBFC, what kind of risk associated with NBFC? See, NBFC is providing loan. If NBFC is providing loan, that means NBFC is prone to credit risk, no doubt in that. Secondly, if NBFC is accepting deposit and providing loan, then there could be a scenario where NBFC is not in a situation to service its withdrawals. That means NBFC can witness the liquidity crisis. Third is market risk. So if NBFC is operating in the market, then n number of types of market risk will be exposed, or NBFC will be exposed to those market risks as well. And lastly, if an organization is operating, in that case, human error, technological error, legal errors, or legal risk are part of day-to-day transactions. So all of the above risk are, or I would say NBFC is prone to all of the above risk which are mentioned in the category. Now, if you don't know what is credit risk, it means if you have borrowed a loan, but the borrower do not pay back the loan, then we call it as credit risk. This credit risk is further categorized as counterparty risk, it is categorized as concentration risk, and even it is termed as country risk depending upon the different aspects. In case of liquidity risk, it basically means when an organization do not possess the adequate amount of cash so that they can service their day-to-day operation. For example, if NBFC is not having the liquidity to service its withdrawals, then I would say there is a liquidity risk. Operation risk as discussed, so answer is going to be all of the above. Next question is important. I would request you to go through with this entire, I have given the entire screen to you. Just read out this entire paragraph which was mentioned in the question which was asked. So the question says, the X has introduced a new circular to streamline investment in debt securities for retail investors. Effective from dash, this circular aims to enhance transparency, accessibility, and investor protection in the debt market. Under the new framework, retail investors can now block their investment funds through UPI, providing a seamless and efficient transaction mechanism. Additionally, the circular sets a limit on the amount that can be blocked for such investments per transaction. This ensures better risk management and caters to retail investors' needs without overexposure to the market volatility. The new guidelines also reduce the settlement timeline, improving the process efficiency, and this initiative aligns in the direction of ongoing participation in the debt securities and promotes sustainable market growth. The circular applies to both public issues of debt securities and preference share, enhancing ease of access for retail investors while reducing the operational challenges for the issuers. What this is actually, those who are watching this RBI session for the very first time, I would like to inform you that in RBI you get a paragraph. This paragraph is given, and on the basis of this paragraph, further questions are asked. But it is not reading comprehension. That means you won't get the answers in the paragraph. A paragraph is just for the reference, and on the basis of this reference, different questions are framed. Those questions can be framed independently also. Those questions can be framed independently also. So I would say this is one of the important criteria of RBI to kill your time in the examination. Because when you ask me how to appear in these type of questions, practically guys, I don't read the paragraph. I don't read the paragraph for which we have different questions. I directly jump to the question first. If I jump to the question, the circular was released by which regulatory body? Now they have not mentioned which circular. They have not mentioned which circular. What I will do, I will just go in this last wala part, that is the conclusion part. In the conclusion part, they say the circular applies to both public issues of debt securities and preference shares. So debt securities and preference shares, public issue, which means this is a question related to capital market. If this is a question related to capital market, undoubtedly, who is going to be responsible? So SEBI is responsible to come up with I would say the guidelines which has been presented. So what I have done, I read the question, went back, just read the last few lines. Why last few lines? Because they are asking me who issued the circular. Obviously the circular which has been talked about, it must have been concluded in the last, and on the basis of conclusion, if I can judge, it's fine. Otherwise I will be reading the entire paragraph. I have no other choice. Now moving on to the next question. What is the medium of blocking funds for investing in debt securities for retail investors? Again guys, if you have read the SEBI circular before going for this exam, you know this very well that in the latest circular of SEBI, SEBI has come up with the medium of blocking funds for investing in the debt securities. What it basically means? It means today a company has announced that they will be issuing their debt securities, and if you want to apply, you can apply for it. The moment you will apply for it, amount will be logged in your account, which means you cannot withdraw that amount until and unless the allotment procedure is complete. Now this blocking can be done with the help of which medium? Then the answer is this blocking can be done with the help of UPI medium. That means I don't know which kind of application you use. Let's say I use X application and I apply for debt securities or maybe preference shares. For that matter, for equity shares, I can make the payment or I can block my amount against that application which I am registering with the help of UPI. So the answer to this particular question is UPI. Moving to the next, what is the limit of blocking funds for investing in debt securities for retail investors? Again, I would say this question is something which do not require reading of the information which was given. If you have gone through with the news earlier, you might be clear that for this SEBI has come up with a limit which is 5 lakh rupees. So 5 lakh rupees is the limit for retail investors. Circular was applicable from which date? This is important that SEBI is talking about this circular, but the question is this circular is going to be applicable from which date? This is a question which I would say you may not be in a position to answer. It's a question which is purely fact based. It's a question which is purely fact based, and the answer to this particular question is, sir, from 1st of November 2024. So this is going to be applicable from 1st of November 2024, and SEBI has made this announcement that if you are applying for debt securities or preference share, you can apply through or you can lock your amount through UPI. Limit is 5 lakhs and it will be applicable from 1st November 2024. We have the next paragraph. Now follow my trick which I told you earlier. Just have a look of this paragraph. What I can take in the first look? In the first look, I can take Sustainable Development Report. Second is Sustainable Development Goals. These are the two things which I can take in the first look itself. I'm not reading it. I'm not reading it. It's not important right now. Trust me, it's not important right now. Let's directly jump to the question. What are the predecessors of Sustainable Development Goals? Sir, predecessors means सस्टेनेबल डेवलपमेंट गोल से पहले कौन से गोल्स थे जिनको कंट्रीज टारगेट कर रही थी? Is it mentioned in the paragraph? Obviously, it won't be mentioned in the paragraph. It's an RBI question. So the answer will be what? If you are aware, Millennium Development Goals from 2000 to 2015. Then in 2016, Sustainable Development Goals were introduced. So without reading the paragraph, I have given this answer. That is the B option. Now move on to the next question. Which of the following refers to an economy model that aims to reduce environmental risk and ecological scarcities while promoting sustainable development? So sustainable development is basically a process where we are aiming to develop our nation, but keeping in mind the, I would say, sustainable utilization of resources so that we can keep or we can maintain the resources which can be utilized by the future generations to come. So on that particular basis, if I have to answer this question, one is sustainable development related to environmental. So if we talk about environment wala part, then obviously I will go with green. But inside green, I have two terms. Inside green, I have two terms. One is green innovation. And the other point is, what? So the other point is green economy. But what they are asking, economic model. So economic model, innovation is something else. Model means the structure on which an economy runs. So the structure on which economy runs. So the answer will be green economy. So green economy is the correct answer to the given question. See, we have answered these two questions without even reading the paragraph. This is what you need to do in the examination as well, because you will be getting very limited time to answer all these questions. So you need to save each and every minute of yours in the examination, which is going to help you a lot. Now we have one more paragraph based question. What does this question says? The first look of the paragraph gives me first one, that is RBI. Second is new category of banks. And for what? Sir, for the promotion of financial inclusion. For the promotion of financial inclusion. This is what I am getting in first look. That's it. I'll move ahead. That's it. I'll move ahead. Now I will be moving to the first question. 2013-14 banks were identified under a certain category. What is this category? Sir, in 2013-14, two banks were set up in order to achieve the targets of financial inclusion. One is payment bank and the other one is small finance bank. Now I am confused that what should be my correct answer, which means I have to go through. That means I have to go through with the details given. So as you understand the details, they have given that financial penetration, economic growth in remote areas, that is true, but they are talking about banking services, high proportion of loans towards. The moment they say high proportion of loans, I should be very much clear that payment banks, they are not involved in lending. Only the banks which are involved in lending is small finance bank. So the answer to this particular question, without reading further, is small finance banks, which means I will be clear with this statement that the category which they are discussing in this particular paragraph is small finance bank. Moving to the next question. These banks cater to which particular sector? So they will be catering to large corporates? No. Micro, small, medium enterprises only? No. Wealth management clients? No. Foreign institutional investors? No. They are targeting low income individuals and small businesses so that lending can be given to them and they can enjoy this lending in order to fulfill their credit requirements. Moving on to the next question. Sir, what proportion of X? So they have not given the answer small finance bank, because otherwise the candidate like me who has read all the questions from the question only will find the answer of the first question. So I have made that point clear that agar Madhav aayega to use pakad lena. So they have given X, but we have figured out This is small finance bank. Ending must go towards priority sector. So the priority sector lending limit for the small finance bank is what? So that is 75% as set at the time of setting up of small finance banks. So these were some of the descriptive questions which we have received from finance section. Obviously, finance and management collectively total 30 questions are asked, and Mahesh sir at 6 p.m. will be discussing the questions which were asked from management. Now, we'll quickly discuss, not in detail, we'll quickly discuss the descriptive questions. There were 3 questions asked from finance and rest 3 were from the management wala part. So the first question was, what are derivatives? Discuss different types of derivatives, the key market participants, their significance in financial market and risk associated with them. In short, what they want to know? They want to know, write a note on derivatives. They want you to write a note on derivatives. If you feel that derivative is one of the financial instrument and it is one of the financial instrument under financial market, how RBI has framed a 15-marker question? Firstly, RBI do not come with the questions randomly. If you check the RBI syllabus closely, they have given derivatives or derivatives have been mentioned separately. The term derivative has been mentioned separately in the financial inclusion segment. So if the derivative has been mentioned separately, so they have framed a question from that separately mentioned topic, that is derivatives. And what you need to answer is, first you need to define what are derivatives. Easy, straightforward question. First define what are derivatives, then discuss its types, then discuss the market participants, discuss its benefits like hedging, speculation, and in the end discuss the risk which are involved or related to the derivatives. Special focus should be on option as well as swap, because these are the two derivatives where you have much to write in comparison to forward and future. But don't worry, I will be coming up with a separate session where I'll give you sample answers to these questions which will help you a lot in your upcoming preparation. Moving on to the next question, what are the additional tier 1 bonds? So they are asking you a question related to the bonds, additional tier 1 bonds, discuss their unique features, explain how they differ from the other types of bonds. Anyone who has heard this term earlier? Those who are live, anyone who has heard this term earlier? Any idea, guys? Have you heard this term earlier? Because when I was going through with this, when I was taking a discussion session, when RBI examination was conducted, personally, I was shocked to know that this type of question was asked by RBI, but yes, it is important. So if the question is asked, what is additional tier 1 bonds, what will be your answer? See, additional tier 1 bonds, obviously these are the debt instruments which is issued by bank to increase their core equity base and meet the capital adequacy requirements. For example, if I talk about the capital adequacy ratio, in case of capital adequacy ratio, which is need to be maintained 9% as per RBI, and out of 9%, 7% from tier 1 and 2% is maintained out of tier 2 capital, and in tier 1, 5.5% from tier 1 capital and 1.5% from additional tier 1 capital. So in order to meet bank's requirement, so that bank has the desired capital in the tier 1 capital to match the capital adequacy requirements, this initiative has been taken over the period of time by the bank. So it is a good question. I would say it is a tricky question as well, that what are additional tier 1 capital? You must mention the features of additional tier 1 capital. Then you should mention the purpose, why they are issued. Then you must mention who is responsible to regulate them. It is not SEBI, it is RBI. Then you must mention the risk which is associated. Then you must mention who are the investors interested in tier 1 capital or tier 1 bonds. And lastly, you must be answering that how it is treated. So it is treated as a perpetual nature. It has a perpetual nature and it is treated as equity. It is not treated as debt. That is very important. It is treated as equity rather than a term bond, but it is treated as equity, not as a bond. Got it? Moving on to the next question. What is the difference between value investing? What is a difference between value investing and growth investing? Again, I would say heads up to RBI. They have again asked a good question, that is value investing The question they have asked is value investing versus versus growth investing. Versus growth investing. Now the question is, sir, what is the meaning of these two terms? So if I come up in this particular discussion, this is a very niche area from where RBI has framed the question. So growth and value are the two fundamental approaches or the style in stock market or in the stock mutual fund investing. So growth investors, they seek companies that offer strong earnings growth, while value investors, they seek stocks that appear to be undervalued in the marketplace. So this is a very important area which we need to remember. So growth investing and value investing, one which is concerned about the growth of the company and the other one which is concerned about the increase in value or market value in the near future. So this is how these two questions were asked. Again, these were two beautiful questions which require, I would say, not in-depth knowledge of finance, but yes, in-depth coverage. But yes, in-depth coverage of current affairs where these areas were in news in the current affairs, and on the basis of same, this question has been asked. Even I would say this time RBI was more fascinated towards financial market. We can say that almost two questions out of three were related to the financial market area, which is a point to note down over here, because in the next year you cannot predict that RBI will follow the same trend, but yes, financial market is an important topic to cover for your upcoming finance examination. As I said, current affairs, you need to cover some of the current affairs rigorously. One is you need to cover PIB current affairs, finance related current affairs, RBI current affairs, latest government schemes, ESI current affairs, and reports and indices. And we are running separate session Monday to Saturday at 6 p.m. on all these topics. Tuesday, finance current affairs. On Wednesday, we have RBI updates. These two sessions are taken by me, where I discuss finance and RBI related news in much detail. Lastly, if you want to clear 2025 exam, use code MADHAV. This is MADHAV. Use this code in order to enjoy maximum discount on your Lakshya batch. Subscribe to the RBI Grade B platform on Testbook in order to ensure your selection in the upcoming future. So that will be all from my side, guys. We'll catch you in the next session to go. Till then, keep preparing. Do watch n number of videos which are available on our platform to understand more about RBI, and don't waste your time. Start your preparation for our RBI right now, because RBI possess huge syllabus and it requires immense input from day one itself. So let's try harder in order to clear this exam in the very first attempt itself. Thank you so much. Good luck. God bless you all.